Okay, good afternoon, everyone. I welcome you back again into this live trading. And I think this week also, I think is going to be like something like a certain trading week. And I think this Friday also, I'm not sure. I think because Friday is a public holiday here in Singapore, so I think that live trading also, I think we need to check. Okay. Anyways, Thursday is that?
Yeah, tomorrow.
Tomorrow is a public holiday.
Yeah.
Okay, I didn't know that. Okay, thanks. Okay, thanks. Okay. Okay, do take note of the risk disclosure. Okay, this is going to be purely education, and also do take note that we are trying to make you a successful trader. So I think whenever we come to live trading, I think you need to share openly what are the problems and what are the problems you come across, so at least I can give you a solution. See, most of the things which we do is basically I have been as a trader, okay, I'm aware of what are the problems we face, but there would be some additional problems like, those newbies who come in, sometimes you may have, but whatever is it, I think it's best you share and you get to try to get a solution, and so that, in the long run, you make yourself a better trader. Okay, another thing, okay, let me change the thing. Okay, I think we have we do have some open positions, and in fact, today also, in fact, we included one more column. Okay, I think this might find it very difficult. I mean, very easy for you to use it, especially you want to be a trader. So what we are trying to do is, that means when we give a call, let's assume we give a call. Let's maybe let it be a sell or a buy. See, what happens is usually most of the time, I think I did told you all the problems which we have is because we may feel that the market is going to turn. Okay. This, for sure, the market will turn, but the million-dollar question is whether it's going to turn at point A, point B, or point C. See, for sure, if we know that the market is going to point C, then we don't have to enter at A and B. But what is going to happen is sometimes when we enter in A, then we get stopped out. Then let's say it goes to B, then the market turns. Then most of the time is either we are missing opportunities or we are out of the trade. So what we thought is maybe next time, when I do, every time when I do, probably it's best for me to give you what's the maximum level you can expect. That means what I'm going to do is I'm going to give you the point C also. So that means, in other words, let's assume we take a trade on point A. So, but I'm going to tell you where is point C. So what will happen is, in the event, if it gets stopped out, or in the event, if the market moves against us, then at least you can re-enter near point C or at point C, or when the market turns from point C. Okay. Now let's do some trades. Okay. In fact, right now, in fact, today we have a couple of data out. Okay. Let me share that screen again. Okay, we have Australian retail sales is out, which is better than expected. So we have forecast is about 8.2 and 8.5. The market came out is 8.5. Then we have transaction PMI from the UK, which is out at 8:30 GMT. The forecast is about 22. Okay, then we have USD, ADP, non-farm employment. Okay, and also we have crude oil inventories. Okay, so these are the data that is out today. So now let's look at, see, every day what you should do. See, the reason why we are doing this is because it would be good if you can bring into practice. That means every day you look at this. This is how we do things. See, first of all, when you have any open trades, the best thing is, always when you begin the day or when you start the day, firstly, try to revise the prices of all those open positions. Some might be making money, some might be losing money, some might be break even. So, and also you decide whether you want to hold on. That means carry on to the trade into the next time belt, depending on the type of trade. So if it's a day trading, definitely you may want to hold on. That means give for another day or so for the market to work its way out. And also it depends, where is the market closing. All these factors will be taken into consideration. But on the other hand, if it's a scalping, then you can just decide to close during the next day. When you start, try to close. That means whenever try to close, have some good habit and have some standard method. That means this is how, not just blindly go into the market and just close at market. So you try to close. You see, I always try to negotiate with the market. So how you negotiate is, rather than you close at the market, see, especially when there is no data out and when the market is just quiet and it's way out, then the best way to do is probably you can close at 2 or 3 pips away from the market. Then you revise your stop, maybe about 8 to 10 pips. So on that note, you are trying to get out of the get the best out of the market. So that would be another method which we would like to share with you. Okay, currently we look at, okay, in fact, dollar yen looks a good bet to us because, dollar yen, I think, has just broke out of the range. So see, always see, the tricky part is, especially when you trade on the market when it's breaking out of the range, what happens is usually it might be a genuine break or it might be a false break. If it's a genuine break, then well and good. Definitely we would get a good return. But if it's a false break, then chances are we may get stopped out or it may not give us the returns which we are looking at. So that is the tricky part in trading. Okay, now let's double check. Yeah. So in fact, dollar yen looks good. Okay, let's see what is the level of entry. Okay, when you look at dollar yen, see right now, like as I told you earlier on, okay, it's just a tricky part because see the previous week low is 10635, and in fact this morning it broke below that range, and right now is moving back to the range. So now what is going to happen is either the market is going to consolidate, eventually break down, or consolidate and it may move back into the range again. So there's only two things going to happen. One is either the market is going to give us a good returns or rewards, or if you practice a tight stop, then chances are you may get stopped out and you may be out of the market. So looking at the weekly is below and moving out of the range. Daily is also moving below and out of the range. And right now you see this the 6-hour chart. In fact, it has made a base, and right now it's moving back to the range. So in other words, if if I'm right on this trade, or if I'm right on this market, the maximum high, that means if I'm going to go for a sell, the maximum high I should be getting is 10670. Okay, 10670, and yeah, 10670, and I don't see the reason why you should be going above that, or even max is 10690. So that means these are the two levels I would want to take that as a referral point. So that means I'm going to go for a sell. Okay, my selling price would be, okay, let me check on that also. Okay, 640. In fact, 640 is 640, 650 is a selling level. Okay, and as I told you, the maximum I'm looking at is 665, 670, and 690. So if let's assume I'm going for a sell, and if this is a genuine breakout, okay, what is going to happen is, okay, let's do this trade. This is a scalping. Right now it's trading at 6. So the maximum high I'm expecting is 10670 to 90. So you can trade this on two method. One is if you're planning to hold the trade overnight. Okay, that means you're planning to hold the trade. Definitely you may get the returns. But on the other hand, always remember, when you hold the trade longer, the risk factor would also be a bit higher compared to the scalping. And on the other hand, your rewards will also be greater. So that means the maximum high I'm looking at is 10690. So when I say maximum high, either you can put a stop above that, or if let's assume you put a stop before that, that means below that, then what you should do is you should go for a re-entry. Okay, when I say re-entry means, that means if let's say market goes even higher, then you try to use the maximum high as the benchmark. So now what we will do is, okay, we'll try to go for a sell at 10640, and maybe I want to go stop at 106. So if I'm going to do this, then this is definitely, I don't think it's a scalping, so it's day trading. So I'm going to put my stop above 95, and my take profit is about 10580. So then this expiry is, I want to work until end of the day. Yeah, I want to, yeah, I don't have the time. Okay, then I want to, hold on. This is, okay, because I think this one, I think we have a prior issue on this. Okay, never mind. You put the expiry until end of the day. Okay? Basically, what we are doing this is going to be a day trading, because the reason is because we feel that this breakout has happened, and as long as the market is below 10690, okay, 10690, we still feel that the price is going to go lower, and we should minimum see at least 106 or 10 580 by tonight, or worst come to worst by tomorrow. So this is if you are doing a day trading. If you are doing, let's assume if you are going for a scalping, the same trade, what you can do is, again, this the maximum is this. So you want to put a tight stop. Okay, what I want to do is probably I want to enter here. Then my take stop loss is 106.75, because remember I told you that there is one high which I'm expecting is 106.65. So probably we put about 35 pips, and this one I exit before 6, and the expiry is until 5 p.m. So you can have two trades set up. Okay, you can have two trades set up, but it all depends on your holding period and your risk reward ratio. And in fact, that's what dictates the trade difference. See, sometimes, always remember, when you are going for a bigger profit, okay, you need to give ample time to the market to work its way out. So if you are going for a quick one scalping, always remember the scalping is your risk reward is much lower, and your returns also is much lower compared to the day or swing. And that's how you interpret, and that's how you differentiate the trade. Let's do one or two more examples. Okay, the next one, I think pound, we have a data. Okay, pound, we have a data, and pound is starting to move. Okay, let's try this pound. Okay, looking at pound. Okay, the thing what I concluded is the high has already been seen. Okay, so then the maximum high I would expect to see is not above 124.85. So that's the maximum high I'm expecting on this time belt, and my target would be near 12405, and if it breaks, then probably we can get 12375 or 12365. Okay, see, I've decided. Okay, well, see, this is how you always have to initiate your trade. Always ask, what is your stop loss? What is your reward? That means, what is your exit point? Then you decide on your entry, then also your holding period. All this would give you a comfortable trade setup with a consistent returns. Okay, now we look at pound. Okay, pound, as I told you, okay, the maximum high is 85. So I have 85.90. I have a resistance. So 1, 2, 3, 4, 60 is my entry, and my take profit should be 12405 or even lower. Remember, just now I said 12375. So 12375, there is a support. So now how we would be trading this is, again, this you can call it a news trading, because there is a data announcement coming in around that time. So we are going to sell. Okay, the maximum high I'm expecting is 12490. So what we are going to do is we are going to do a limit sell. So this is 12460 is our entry. Because the reason why we are putting a bit slightly higher is because of the news. See, remember, whenever the news comes, if the news is favorable, then it definitely it can move in our direction. But it's against us, then you might get a spike. You might get a spike all of a sudden. Then that might be a better entry point. But another problem with news trading is sometimes you are right. Okay, it would be good if you are profitable, is provided if you have taken a trade on the market. So to avoid that kind of disappointment, what we do is normally we try to go in half lots. So that means we try to enter half lot at market, then try to enter another half lot, one lot at our price. So in the event something happens like this, we have half lot to go in the trade. So, but on the other hand, is also you must understand that the risk is there. Yeah. So take profit is about 12410, because the reason is because 12405 is the support. Okay, another thing, another news trading you can do is the problem is the downside. We have too many supports. So I don't think we can do a stop sell, because if you do a stop sell, chances are you may not get the reward. Okay. Any? Okay. I think these are the trades you can look at. Then the rest of the things, let me double check before we go and discussion. Let me check whether we have any other opportunities. We have one more. Euro just started to move. Okay, it's moving lower. So let's see. I think it's just started moving lower, and in fact, I think we have a stop sell order on this, if I'm not mistaken. Yeah, it's triggered. So we have a euro, which is a stop sell, which is triggered. So even that, either you can enter a stop sell, or if you feel that you don't want to take that trade, then you can go for a limit sell. Okay, so another again scalping euro 10840, because if I feel that I don't want to go for a stop sell. Okay, sorry, the maximum is, that's a selling level. Okay, the maximum high I'm looking at is 10885. So 10885. So then this is, go for a limit sell 10840, 10890, and this one is 10790. So you got about 50 pips. 1:1. 1:1. Again, this is 5 o'clock. So in other words, you can do a If you think, you don't want to miss the move, then you can go in half lot. So your target should be 107.90 or 107.85. And in fact, this has got a potential to reach even the previous low, which is 107.30. So that again will depend on the tonight's data and how is the market heading down. So then maybe you may have a chance of reaching that level. Okay. Okay. Now let's go back to the questions, and you want to discuss any market, we can do. Okay, Joseph question. I think this morning we entered a momentum sell at this. What should we do with this open trade, which is currently a loss? I think that we are now entering and now. Okay, see, that is the tricky part in trading. So if you are, we are still holding the trade. Okay, we are still holding the trade, and remember, see, because see what happens is the opportunity always doesn't come. See, there's two ways which you can look at. One is you can if you feel that you want to 106.40, and I've also given you the maximum level, which is 106.90. So what is going to happen is the market is going to, even this, for the next 2.5 hours, the market will be trading somewhere at this point. Then after next time belt only comes, then only you may see your profits coming in, or either the market may start to move in our favor. Otherwise, until then, I think there's nothing much we can do. So either you want to wait, you want to close your trade now. Then you want to enter towards end of that time belt. Okay, that would be one suggestions or one solution. Another way is you just wait for the stop, because you already have the stop. Let it work its way out, and let it figure. If you feel, let it get stopped out, then after that, then we can decide on that. Okay, the next question. Perhaps next time we could lock in the same trade initially by precise. Everyone, they. Okay, this one perhaps. Okay, the next question, I had one question. It says, next time we could lock in the same trade initial by precise. Example, everyone traded this for a day. Yeah, see, there is no, again, like as I said, there is no such thing as a holy grail, or there's no such thing as a perfect system. Okay, we all are working on probabilities. So when we talk about probabilities, is how we work is when we make, okay, losing is part of the game. But always remember that when you lose, you try to lose the minimum, and you try to get, that's why we were putting a stop, and we have a view, then we try to trade the market. So the whole idea is, your capital must be protected. Even we lose, even you can lose 10%, 20% from your equity is no harm. But as long as you have a proper system, you have a proper method, and if you have a proper approach, then once market turns around and everything falls into play, then you should be able to make money consistently and move forward. So this is always the case. So the only thing is, don't get into the emotional trap. That is the most difficult thing. And if you get trapped into it, then it's going to be very difficult for you to be continuing this business, or continuing in this trade. Okay, why we entering the exit time for trade? In what base we need to enter? Okay, the reason why I told you early on. Okay, because because our system is quite unique. Okay, when we say unique means, see, we are projecting. Okay, so we are, whenever you look at chart, any charts you look at, so it's always time against price. Okay, this is what most charts do, and this is how it works. Either this way or this way, it doesn't matter. Okay, so basically this is the price, and horizontal is the time. So what we should be doing is we should be taking into consideration both factors. Yeah, that's what we do. So the reason why we have a specific time belt and all these things is because we have been looking at it. In fact, looking at charts for many years, and we concluded that both the factors are important. So sometimes what will happen is you might be seeing, like for instance here, if you look at this, okay, this is euro. Okay, this is coming down. Okay, coming down. So of course we know that this is the support. Okay, this is where the major support is. So now the question is, will the market is going to test this and turn? It's going to turn before that or even now. So that is a very tricky part, and that is a very tricky question to look at. So we have to trade what we see, and we have to trade on what we project or what we expect to happen. But of course, this is up to the market to uh, give us the clue or move in our direction. So we got to be very careful and very clear what we are doing. So that is the most difficult. I mean, difficult in the sense that you should be so-called, like have a discipline, have a proper trading strategy, have a proper method. Then you do it. Then you would not get panic, or you would not lose your confidence, even if the market goes against you or the market goes in the opposite direction. Excuse me. Yeah. Any other questions or any other markets you all want to discuss? You want to discuss any market or maybe how was your trading the last couple of days? How was your feeling? Because see, all this is, you have to feel it. That means when you put in a trade, after the trade is initiated or the trade is entered, then you have to feel it. Especially, I mean, I know some of you are demo account, some of you are live account, but uh, you have to get used to it, and you have to adapt and understand how this thing works. So that's our whole idea of we doing these things. Okay, for Euro USD, seems market goes high. Can we go for a small buy entry at this and exit at this? See, uh, please try not to change plan. Okay, see, right now the market has been coming down. Okay, right now it's coming down. Okay, this is not given us a clue that this market has bottomed or it has hit the base. So the thing is, the market should be hitting this base, should be, but there is no such thing as 100% guarantee that this might come and turn. Okay? But on the other hand, if it breaks this low, Okay, we may even see lower, okay, lower, which is this level, which is 10635. So we have a support at 10730 and we have a support at 10635. So either one, the market may turn or bounce. Okay, when I say bounce, means it's just a small correction or retracement. So, but the thing is, the only clue we have is, okay, that is going to be the base. And we have not seen the base yet. Right now, the market is making lower. So, right now, the probability is, can say about 60 or 70%, is going to be downside. Okay, but on the other hand, if we see the market reverse from here and move higher, then we may say that this market has turned bottom early, then the market may push higher. So until then, right now, there is no guarantee or no confirmation yet. The base is seen. We still feel that this is going to go lower. Okay. Any other questions or any other market? Aussie yen entered at 68.38 this morning. Goes loss. Can we hold it? Okay. Again, this is also a similar situation. Okay, Aussie yen. See, what has happened was, I'll show you the chart. See, this is where the market broke this low. So we felt, yeah, this is going to break lower and go lower, but unfortunately, this was a failure or a false break. So now the question for you is whether to hold or whether to close the trade. So in fact, this fact, the maximum high I expect on this market is 69 figure or 69 20. Okay, 69 20 or even 69.50. So that means the maximum, maximum high I am expecting is 69.20 to 69.50. That means before 69.50, the market should turn down and should come down. Okay, now, the question is, should we hold the trade now or should we close the trade? So what I would suggest is, if you feel that if you're not comfortable, then you try to close the trade, then wait for it to go higher, then maybe you can sell at 69 or 69.20. 69.20. No, I don't see the price going beyond that. I don't see the price going beyond that. Let me double confirm system. Yeah, I don't see it going beyond this 69.50. So like what I would suggest is, you can decide. Either you want to close the trade and try to enter at 69. That would be one option. Another option is you wait for this trade, because the thing is, yeah, as long as that 69 holds, 69 and 69.50, that's why I said around here, somewhere here, holds, I see the price turning down. So you can decide what you want to do. But of course, we can hold, but whatever is it, like again, this move you are seeing, this is going to only happen another, I should say about 2 hours, 20 minutes. 2 hours, 20 minutes, the price may slowly push higher. But whatever is it, eventually I see the price coming down. Okay. Any other questions or any other market you all want to discuss? Any market? See, like try to to understand what we are trying to do. Okay, basically, you have a plan. Okay, always remember, whenever you are trading, always remember we need to have a plan. Plan A is, okay, when we take a trade, entry, exit, stop loss. If everything goes well, everything goes smooth, okay, we go on plan A. Then you go on plan B. Okay, plan B is in the event if it gets stopped out, or in the event if its market is moving against us, what should we do? So on that note, okay, there's another way which you can trade is there's such a thing called dodging. Okay, so that means like for instance, I don't know what's the price we entered at 38. So right now he's losing about 17 pips. Okay, and if this is yeah. So probably what we should do is we should have bought another trade in the event, because we still hold the trade. See, because you just follow this trade until tomorrow. Okay, until tomorrow. Okay, I'm very sure that by tomorrow this thing should come down. Okay, I'm very sure on that. I'm very positive. Unless if it goes above 69 and 69.20, then my assumption and my theory is wrong. But as long as we don't see that, then I think we should be comfortably seeing the price go lower. So there's going lower can happen today, can happen tomorrow, or even Friday. That I wouldn't know. Only the market has to give us an answer or the result. Okay, the next question is, before trade, our checking part always is need to check the previous low and previous high for us to decide to go for buy or sell, right? Oh, see, that I wouldn't say that is a bad idea or it doesn't work. Okay? That can be a good method. That's one of the method which you can use. That's very easy. See, like for instance, if you look at this Aussie yen, yesterday's high was 69 and yesterday's low was 68. 40, 840. And in fact, we sold at around 68, 30, yeah, 30, about 30. So 30 minutes, we just sold after the break has happened. So chances are, like that's why I said, in this kind of scenario, there isn't much we can do. The only thing is we just have to wait for the market to give us an outcome, or you decide. And if you feel if you're not comfortable, the best thing is try to close the trade at cost, or excuse me, go with a minimum damage. Minimum damage maybe about 10, 15 pips. See, losing 10 pips, 20 pips, all this can be the minimum, and this can be covered any point of the time or any time. So not to worry, even if you're losing consecutive, consistently, 10, 20 pips you're losing, it's okay. One good trade should be enough to write off the entire losses and move forward from there. Okay. Any other questions or any other markets you all want to discuss? Okay. So if you have no questions, okay, we conclude today's session, and once again, thank you for coming, and looking forward to see you again on Friday. Okay, what we will do is we are trying we are trying to support traders as much as we can. Okay? So you just have to look at the market, study, for those of you who have been attended our workshop, just study the workshop, and try to practice again and again. Then slowly you begin to realize, why we are doing these things, and how is it possible, and why all these answers can be found from yourself. Okay. Okay. Thank you very much. Okay. I'll see you again on Friday. Bye. Thank you.